This is Create the Next from Pro CFO Partners, where every week we explore strategies and ideas for financial management and growth to help today's businesses put their financial picture in context.
Welcome back to Create the Next. I'm Chris Bentliff, and I am joined today by Gaetano Di Pietro. And Gaetano, it's nice to have you with us. And I love our topic today because you always want to partner with somebody who is super into whatever they're doing. So the thing that maybe isn't your sweet spot is the thing that they just can't get enough of. And our topic, which is one that you came up with, is why finance isn't boring, to which I say, prove it, sir. But this is a great opportunity for us to sort of dig into what so many of us find intimidating or sort of confusing. And you're telling us, actually, none of that is the way that we need to approach this. And with the right perspective, we can think differently about it. So welcome. And I guess let's start with, what do you mean finance isn't boring?
Well, first of all, thank you for having me. It's wonderful to be here. I'm honored, and thank you. I'm looking forward to participating here. But finance is not boring at all. It's everything that you can want in terms of excitement. And it's all about perspective. So finance, if you really understand or look at what's involved with finance, it's basically the flywheel of any business, of any organization. You need finance involved in every major decision that takes place within a business, whether it's a small business, medium-sized, or a corporation. Finance is critical. You need that CFO or that financial leader at the table for every aspect of managing the business effectively. But it's not only that. On a grander scale, finance, it involves dynamic markets. You got major economic indicators. Example right now is inflation. And that impacts the individual corporations right down to the individual himself or herself. There's factors that drive business. For instance, if I use the example of inflation, we've printed a lot of money. They're saying that's the cause of inflation. Our inflation rate has been going up, and businesses have been paying the price. That means higher cost for products. Ultimately, all of this gets transferred to the consumer, and then the consumer pays for it on their side. And then a way to deal with that inflation is interest rates. And interest rates specifically have been rising. And that, again, throws more cost to the business. And that cost ultimately has to get passed through to the consumer. So finance is involved in all of that. Managing that risk, managing those changes, those geopolitical changes, those macroeconomic changes, all involve finance and the financial leader at the table in order to do this effectively.
There's a huge macro element, right? And we can look at finance with a capital F and all of the sort of, global points of view on it. And then it funnels down into, as you pointed out, like what's happening with our checkbook when we go to the grocery store. When we're talking about business, and especially in kind of this small to mid market, I mean, enterprise has so many interesting sort of, they're almost like a country unto themselves sometimes, the size of the organization, with the different ways that they're doing things and where they're doing things. But as we get down into kind of, I don't know, that $100 million mark or $200 million mark, how can we simplify our perspective on finance? Because it can either feel like a chore, or it can feel like just a cog in the machine, as you pointed out. So I've got my team around me, and one of them is the CFO, and she needs to just make her reports. But part of what I'm hearing you say is, no, it touches all those other things. It touches marketing. It touches product development. It touches your labor force. It touches all these things. How can we simplify our own point of view on this when we're not maybe as sort of our point of view isn't as refined as yours as an expert is? Is there a way that we can just sort of like stop thinking about it like this, instead think about it like that?
The simplest way I look at it, and I defer to my father and my grandparents and all those European immigrants that came over. And it basically came down to cash. Cash is king. And you want to be able to manage that cash effectively so that you can pay your bills and prosper. And it's really that simple. You want to minimize debt or have debt at a level that's manageable and not suffocating. And you want to be generating excess cash every single month so that you can do the things you need to do to grow, to get better, to have a better life for your children, for yourself, for your business, and so forth. Cash is king. It's that simple.
When we're sort of founding our businesses, or we're in startup mode, we can either be really focused on revenue, maybe then on profit, or we can be not focused enough, and we can be really excited about the idea, or we can be really excited about the market opportunity. And I think sometimes it depends on the position of the individual. Like I'm a detail, or I'm an operations, or I'm a finance motivated person, or I'm an imaginative, inventive, creative person. How do I, as a startup, or even as a person who's a founder, or as a leader, how do I integrate this idea of cash flow and of cash management beyond just another line on the list of responsibilities? How can I work that into kind of the DNA of the organization?
That's a great question. How do you work cash flow into the DNA of your organization? I think you need to align it with performance. For instance, you motivate your sales guys by going out to sell. Their motivation is go out and sell. But that shouldn't be the incentive. The incentive should be selling. Should involve profitable sales, because anybody can sell something if the price is low enough. But if that price is not covering your costs, you're bleeding cash, and that doesn't benefit anybody. So what I've done in the past is I've taken businesses and I've had a lot of success with it. Is businesses, and specifically I'll use the example of the sales team. They're managed on sales, or they're incentivized based on sales, which I believe is the wrong incentive. And then sometimes they're incentivized based on margin, which again, it's better, but again, not ideal. What I've been able to do with some of my experiences, some of the businesses I've worked with, I've managed all the way down to the EBITDA. So effectively, we're holding that salesperson or that team that's out there selling that product accountable, not only on the top line, but how much of that rolls down to the bottom line. And that's where the real incentive compensation comes in. How much additional EBITDA have you made for the business? Now, there's factors in there that can't be controlled. There's overhead factors in there once you get beyond gross profit that can't be controlled, but it's got to be allocated. It's got to be allocated in an equitable manner across the organization and properly incentivized. And if the sales team understands that it's fair and equitable and it's properly communicated, and then everybody's held accountable or to the same standard, you're going to see improvements in the organization. And ultimately, that EBITDA is cash. That's cash. At the end of the day, that's operating cash that has been generated for the business. And that cash, on a free cash flow basis, increases the valuation of the business going forward. So now the business is not only profitable, it's also increasing in value. And that in turn helps the stakeholders and the shareholders, and it helps the individuals within the business because everybody's now cash focused. How do we manage our expenses, our costs, so that EBITDA number exceeds expectations? Because at the end of the day, if you want to do some kind of a liquidity event, you bring in an investment banker or a group or a team, they're going to look at that EBITDA number and they're going to give you a multiple of that EBITDA number based on the industry. So the stronger and the better that EBITDA number is, the better the business. And that ultimately comes down to cash.
I love everything that you are talking about right now. I love when we get into sort of nuts and bolts like this. And I mean, part of what I love about what you're sharing is I'm thinking about how many of us have made bad deals because it got me over the quota for the end of the month or whatever. How many of us have made unprofitable deals because well, it will probably turn into X, Y, and Z, or this is a good one for us to have because some ancillary thing, they're connected to a lot of things. And sometimes that works out, but
And
often,
sometimes it works out, to your point. Yeah,
you know,
sometimes.
and what I love about what you're saying is imagine taking the high performers. They didn't earn the cruise because they made the most deals. It's because they had the healthiest output where profitability is concerned, or where some of the other things. So what you're really doing is sort of Trojan horsing financial literacy into your sales team. Yeah.
Exactly, exactly. And I've seen it implemented and I've seen it work. And what happens is the poor performers, the guys that are not willing to work hard and get the results, they're ultimately going to exit the company. One way or another, they're going to exit either on their own volition, or they'll be forced to exit because they can't keep up. Your best performers are going to rise. And ultimately, what you're creating is a common mindset within the business right across every vertical. So everybody's thinking the same, and you basically got that company moving forward in unison.
That what you're also doing is connecting to your sort of your overall goals and strategies. You've said our focal point, for instance, is to improve profitability by X in the next X amount of time. And we're not just going to talk about that. We're going to chisel that down. We're going to whittle that down to the very daily operations of you and the calls you're making and the pitches you're making and whatever. And I think that is another really important point, because so often we make these big ideas, we have these goals, and they're hard to connect to the sort of day to day. They're hard to connect to the rank and file who weren't in the room, and they're just trying to do good work with what their responsibilities are every day. And if you can make that connection, you're far more likely to achieve those goals rather than just talk about them and hope that somehow you can move this Titanic in the right direction. Yeah.
Exactly. But a lot of that is not just talking about it, but then again, the way I've executed it or seen it executed is there's regular monthly performance meetings, and you bring in everybody and you put those numbers up on the board or on the screen, and you have everybody speak to the results and explain what happened, why they succeeded, why they missed, what was special about this particular month. You make everybody accountable, but you make everybody accountable as a team. So you've got different tiers. You've got the individual goals and the personal goals, but you've also got the team goals. So that makes it more of a cohesive group, because everybody wants to win and everybody's winning together. And when you do win and the team wins together, it's an incredible feeling. It's the best feeling.
I guess that gets into this finance isn't boring, right? So when you're sitting where
can't be boring,
when you're sitting in your chair, is part of the thrill of what you do, or the point of view that you have, sort of identifying these levers and the buttons and the smaller buttons that impact the bigger buttons, and realizing that if we can just move this one 2 degrees, look at all the things that can come out of the other side positively, team. And is that sort of problem solving, that kind of puzzle dynamic, part of what makes a high performing CFO, or from your position, a curious and investigating CFO, rather than just, let's crunch some numbers?
It's all part of it, what you just itemized, but what's also part of it is that the financial plan. It's creating the financial model based on the drivers that have been identified by the sales team, by your operational team, by everybody, incorporating those specific drivers inside your financial model, and then forecasting, trying to understand what's going to happen based on those drivers. As an example, I was involved in a business that was highly tied to the construction industry. And specifically, they were producing chemical resins for the construction industry, the wood industry. And what we found is there's a high correlation between housing starts in the United States and the sales revenue of our business. And that just meant, greater housing starts meant more wood product purchases, which we were selling, and the adhesive that we used to make those wood products and paper laminates and stuff like that would mean So higher sales there would translate into higher sales for us. We built a regression analysis model that basically correlated everything together and created a linear equation for us. And we were able to put that to work based on additional variables that the sales team was bringing to the table and our production group. Those were all being incorporated into the modeling. And guess what? We now had an integrated model that was tied into the macroeconomic factors and the microeconomic factors and the dynamics of the business itself in terms of our customer base. And we were able to forecast what was going to happen in our business. And we started looking at the business on a forward basis as opposed to a backwards looking basis. What happens often is companies produce their results. They take 5 to 10 days, sometimes longer to finalize those numbers. And then they sit down and look at them almost a month later or half a month later. And it's backwards looking. It's backwards looking, and they're not managing going forward. So a lot of what I've done is I've created future looking cash flow models. So we determine our cash ins and our cash outs based on that financial business model that's been created. So we know how much cash should be coming in based on these drivers. We know the impact that that's going to have on our costs, and then we can blow it out for the next 15 weeks or 20 weeks, and we do it on a weekly basis, and then ultimately consolidate it into a monthly basis. We know what's going to happen in our business. And then we measure ourselves on how well we perform to those drivers. We tweak it, of course, but once you start using it and you start experimenting with it and you get experience under your belt, you start understanding your business, and your team starts understanding your business. And when they understand their business, they know what to do. They know what product to push. They know which products are generating the revenue. They know who to talk to. They know what to sell, how to sell it, and so forth. Your production team, your manufacturing team knows where the shrinkage is. They know where the waste is. They know how much that's costing them, and they're incentivized to fix that. They know what their lead times is, what their processing time is. The inventory, the procurement team, are they ordering properly? So all this stuff gets tied together. Everybody's held accountable, and you're holding everybody accountable within their segment, but you're also again making them part of the team as a whole.
This is
and they can see that. They can see that every month because you got those accountability meetings every month.
Yeah, the dashboard, the metrics, the KPIs that are inevitable because you've already done all the hard work to say these are the things that move the needle for us. These are the things we can control, and these are the things we can't control, but that are related to our ability to succeed. And so therefore, team, let's focus on these things. For me, that feels like the golden map that every organization wishes they could have, because it helps us to know really even like if, as you said, 15 weeks out. So if you say these dynamics we can't control, but we want to keep an eye on them because if they go south, it means this and that for us, which means we can circumvent it, or we can go end around on that. I'm thinking a little bit about the pandemic and how flat-footed some organizations were, but for others it was, well, we could see that this was happening and therefore we needed to make this adjustment. And it meant for some, we were able to go around it. For some, we couldn't. We had to go under it. For some, we had to go over it. But if you knew what you knew, you were a lot smarter in the long run than those that were just like, oh, wow, we had no idea that we were going to be so impacted by X, Y, or Z.
Yeah. And what I find is a lot of companies are successful in spite of themselves. Rising tide raises all boats, but that's not the hard times. Those are not the times that, everybody's making money. They forget, they become careless. They waste. There's a lot more wastage. They don't think about it as hard. But when times get tough and you got to tighten your belt, that's when you know which companies have been managed properly. And it becomes very blatant then. And I've seen it with my own eyes because I experienced 2008. I experienced that housing crisis in 2008. I lived it and I saw it with my own eyes, and I saw what it did to the banking industry. I saw what it did to companies involved in the housing industry. And I was directly involved with all of it. And I was involved on a direct basis with working for a financial institution. I was involved working for a professional services firm, specifically KPMG, and I was involved working for KPMG's client, the chemical company, that was directly tied to the housing market. And I saw all aspects of it. I saw how the private equity firm that had initially made that investment in that capital in the chemical company lost $500 million and effectively walked away from it. And that company was a pension fund. So effectively, they lost their pensioners' money. Mm. You know what I mean? And you know, they're huge. They were in the hundreds of billions of dollars of net worth in terms of or assets under management. And they were able to walk away from $500 million. But to compensate for that, I saw within months they were selling assets so they can ensure that their pensioners had money. And that pensioner was my father or somebody's father. You know, they needed that money because they need that money to survive every month. So it's finance is involved in all of that. And therefore it impacts the whole spectrum of our society and of our well-being, and it cannot be boring at all. Comes back to that.
I mean, what a great way to bring everything home and remind us that all these great big things end up in somebody's checkbook or not, you know, and what that means to the human being and to the human element. It's really easy in any of what any of us do to be sort of process focused and forget about the human element that is involved in the businesses that we do, the relationships on the other end of that, which we talk about a lot here at ProCFO Partners, and how that relationship, that human being is really at the end of the funnel is really where all of these conversations sort of come to rest and reside. Yeah. I think that's a really powerful reminder.
Yes, it's indeed. It always comes down to people. It's always about people.
I couldn't have said it better myself, and I can't think of a better way for us to sort of conclude our conversation. Gaetano Di Pietro is. I'm so glad to have had this conversation with you. I can't wait to have you back and talk more about this stuff. Thank you for being a person who thinks finance is not boring, because I think your point of view can be really valuable to so many of the rest of us who can be intimidated or confused by it. And I really appreciate your sharing your sort of common sense point of view on this today. It's been a great.
Thank you very much. I really appreciated the conversation, and thank you for having me.
Thanks. I'll talk to you soon.
Have a great one.
Thanks for watching, and a special thanks to our subscribers. Consider becoming one today. Visit ProCFOPartners.com for more strategies and ideas for financial management and growth to help you put your business's financial picture in context.